Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, it's November the 30th, so we are gonna talk about the best stocks for December 2020 as it is the last day of November today, and this is a video that I do every single month. So we are gonna take a look at 5 stocks that I'm currently watching right now to see whether in the next months we are gonna have a decent buy opportunity. The only thing I ask you guys as always is to please leave me a like. You help me out a lot to grow the channel and reach more people, and really like it's very important, and subscribe to the channel so you don't miss any new updates. Let's begin. So guys, the first stock in the list is Alibaba Group, so ticker symbol BABA, and I have done a deep fundamental analysis and valuation about this one in this video. If you haven't seen, go to check it out. And I have to bring this because actually, in my opinion, is a very undervalued stock, and you see as even today is down minus 4%, but I think that this kind of negativity around Alibaba right now is just something driven by regulations. It's not something bad because of the business itself. And I think that this one is still, once again, a very great opportunity for the long term. We see that the growth of revenues of Alibaba has been exponential, guys, and the analysts are expecting 104 billion in 2021 and 138.8 billion in 2022. Now, this is just remember the Alibaba fiscal year end in March, okay? So this is why here is shifted the data, but it's basically just 3 months later, okay? The revenues expectations are incredibly huge, and we are gonna go now with the holidays and also the Chinese festivities. We are gonna go through probably one of the best quarter for Alibaba, expectations around $33 billion. So briefly, in the fundamental valuation that I did, I find that Alibaba price today should be at least above $300 per share. Okay, now this is the fair price I found. If you want to see the full video, just I leave you the link down in the description below. And their balance sheet is literally amazing. Current ratio 1.9, total assets, total liabilities 2.9, basically 3. The book to value is quite low. The margins are just incredibly high. So very efficient business, and they don't have problem with the business at all. The problem that they are having, and why investors are actually worried about this in the short term, is because of the thing that went on with Ant Group, okay? Because we have Jack Ma that basically went too strong with leverage, and the Chinese government, they didn't like it at all. So they stopped the IPO, and basically with all the regulations, issues, and stuff, we have a short-term period where investors are just worried about the situation which is going on behind these kind of regulations and politics, okay? But in my opinion, in terms of the business itself, Alibaba, which is another thing from Ant Group, okay, it's not the same thing, they are two different companies, well, it's going very, very well. And I think that this regulation issues is gonna go away in the long term, and Alibaba, in my opinion, remains one of the best stocks at the moment, very undervalued. So that's my first one. The second stock, guys, is this one, JD.com. This is the second and last Chinese company in this list, but I think that it's worth to take a look at this one too. Now, probably you heard many people saying that Alibaba is the Chinese Amazon, and that's not true. JD.com is the Chinese Amazon, okay? Because the business of Alibaba is completely different from Amazon, okay? JD.com is very similar to Amazon, as basically it is a business to consumer business, okay? So the fulfillment is made by JD.com, as well as Amazon does, with fulfilled by Amazon. Okay, that's the same. So they have huge buildings and logistics. Okay, so they pack the things, they deliver the things, and as a result, they have the same problem that Amazon. Incredible growth in revenue, which is very great, but the problem are margins. Okay, and this company actually just become profitable in the last 18 months, but the revenues are forecasted to go above 100 billion in the next year. Okay, and considering that the market cap today is 132 billion, I see this one once again as a very interesting stock in a very interesting country, which is China, and which is growing. In 2020 is gonna be the only economy in the world to end up in a positive outlook. Okay, so that's impressive. And I did a fundamental valuation about that one too. So I leave you once again the link down in the description. And the revenues in the last 8 years went from 6.7 billion. In 2019, 82.8 billion. So it's huge. And the expectations are above 100 billion this year, so at the end of 2020, and then 137 billion in 2021. The balance sheet is not bad. The current ratio could be higher. However, 1.20 above 1, it's acceptable, very acceptable, especially when this one is above 1.5. And another thing that I very like about this big Chinese company is that they don't have much debt. Okay, the net debt, once you take into account the cash and cash equivalents, is basically almost to 0%, and that's very great. The book to value is just 6. If you compare this with Amazon, is still very cheap. Now, obviously, you cannot say that they are equal or that this should be equal to this, but basically, just to make you understand, the price to sale ratio of Amazon, the average is 3, while the average of the price to sale ratio for JD.com, it's 1. In my opinion, even if it remains to around 2 or 1.8, if revenues continues to increase on that pace, so above 130 billion, 140 billion in the next 3 to 5 years, 150 billion dollars, well, the company valuation is gonna go up, especially if China continues to grow. And it's forecasted that China will be basically the first economy in the world in the next decade in terms of GDP. So imagine the huge market that they have there. And now JD.com just recently, they are launching their IPO JD Health, which is basically similar to what Amazon is doing. They are selling drugs, okay, and pharmaceutical stuff. The market of China is incredibly huge and is going to continue to grow as the economy grows. And considering that this, JD.com, Alibaba, are between the top companies there, if the country itself continues to grow, well, these companies, they are going to benefit from that in the long term. JD.com, if you want an alternative to Alibaba, in my opinion, has a higher upside potential, okay, because we just saw that the market cap is just 133 billion compared with Alibaba above 700 billion. I would not be surprised to see JD.com market cap around 300 billion in the next 4 to 5 years. When we take a look at the valuation that I did, we have that the fair price today, it should be this. And so the market right now is offering a decent margin of safety, okay, around 35, 36%. So for the long term, if you want to diversify your portfolio a bit with China, so geographical diversification, and take another opportunity, just not in the US, I think that you should take a look at these two stocks over there. So let's get back in the United States, and the third stock in the list, guys, is this one, Uber Technology, ticker symbol Uber. And the stock, I have been talking about this stock, if you're following my channel, since the very beginning, when we were basically in May, so April, between the heart of the pandemic, and they said Uber was trading below $20. And I made at least a couple of videos by saying that I was buying Uber at that time because, in my opinion, this company here is amazing simply because of how useful and easy their services are. And now, obviously, we had the pandemic, so Uber rides revenues basically went completely down and it still have to recover. Since when I told about in those videos that I was buying Uber and why, basically the stock went up more than 100% and it's now trading at between $88.6 billion. Why I still like Uber for the long term? In those previous videos, I was saying that, okay, rides are going down, but what I love about this company is that they never give up. It's a company that said, okay, rides are down, let's focus on other things. And they came out with Uber Eats. They came out with other services, like, for example, delivering parcels and packages door to door. So it's a company that never give up and they always trying to find new ways on making money. And obviously, with regulations here, once again, they have been hit drastically. Some months ago in London, which is one of the most important cities for Uber in Europe, basically they won a claim because they didn't want to give them back the license for London because they were saying that Uber rides sometimes it's not something very safe. Okay, however, they have been able to win this thing and to get back the license again for another 18 months. And then also in the United States, they were saying that the drivers should be considered as basically employees. However, that is not true. And Uber, once again, won that issue. And that was very important for Uber because of the costs involved. Since then, we saw the stock price that basically just went up, continued to go up around $50 per share. And why I think that it is a very important company still for the long term, because now this is just Yahoo Finance, but I did many research by myself, and Uber, guys, this is how much is forecasted to grow in revenue in the next 5 years, okay? Above 50% every single year. And then we have that when we go there, revenue estimates. In 2021, the average 17.6 billion. If you just make a quick math, by the end of December 2024, Uber, with all of their businesses, it should make around $42 billion. And here I have been conservative because I am multiplied by 40% each year, okay, not 57. But you get that, considering a conservative price to sales ratio of Uber of around 3.8, the market cap of the company by 2024 should be around $160 billion. Considering that today is $80 billion, it makes a very interesting investment, especially if over the short term we are gonna see some kind of bad news with vaccines, lockdown, and stuff. The stock can have a pullback because right now we are at all-time high, but if the stock continues to go down a little bit because of bad news about virus and stuff, around $45-$44, where probably I'm gonna buy more. Okay, I already have a substantial position. I have been buying 20, I've been buying 25, 27, and also at 32. But overall, if it goes down a little bit more, I'm gonna probably add some more shares of Uber because I really like the company long term. Now, the fourth stock in the list is Dropbox, guys, ticker symbol DBX. The company is now trading at around $8.2 billion, and I have done 3 or 4 days ago a fundamental valuation about it. What we came out is that this company is interesting right now because they are setting the business in a different way to how it was at the beginning. Because Dropbox started mainly with a cloud business, so a very easy to use cloud business, but it was just a cloud business. And I told you that in that video that it's not possible to compete with stuff like Google, Amazon, Microsoft just with the cloud business. But the catalyst is mainly based because Dropbox is planning to make a workstation, okay, which can work with many different kind of platforms of other companies. Okay, so you can work with Microsoft, Google, Zoom, Slack, whatever you want with Dropbox. And they also acquired HelloSign, which is the second most important software to basically sign documents online. So all of that together should probably solve, or at least in part, the main problem of Dropbox, which has always been this one, guys. A huge amount of users are above 600 million, which is a lot, but just 2.5% of users are paying users. So if they are able to change this by basically providing a workstation, which it makes sense to pay for it because it's very powerful and useful, well, then the stock can have a very big catalyst that can push the price higher. And when I have done the valuation, basically we see that the fair price today is around $29. So the stock is still undervalued today. So the last stock in the list, guys, is Delta Airlines, ticker symbol DAL. Now everyone knows that a travel stock is not good. Yes, I agree with you because the pandemic has completely destroyed this kind of business. However, now we know that sooner or later we are gonna go out from this pandemic. Okay, with the vaccines, we saw many companies that they are now at the last stage of the vaccines. They're already talking about delivering vaccines in December in some states, and then 2021 will be hopefully a kind of go away from the pandemic kind of year. So things are gonna go back to normal at least at the end of 2021, okay? And the world that we are gonna see in the next couple of years and 3 years is gonna be more similar to how it used to be. And why I'm telling you Delta Airlines? Now, once again, this is a company, I don't know if you probably follow my channel since the beginning, that I have been talking about, and I bought actually this company back then in April. Basically, when Warren Buffett sold, a couple of days later, I bought with a long-term view, simply because Delta Airlines is one of the most important companies of air travel in the US, and I cannot imagine that the US will stop to fly in the next 5 years. Things are gonna go back to normal, and Delta Airlines, as other companies during this pandemic, they have done a reset of their businesses. They cut a lot of costs. So we are gonna see, for example, for Delta especially, that was one of the best even before the pandemic. We're gonna see that later on, they are gonna still be one of the best travel companies in the United States. When I look at Delta Airlines, I see that first of all they took more cash. So right now they are holding around 25 billion in current assets, and so current liabilities are actually less. That means that Delta Airlines at the moment, for the first time, is having a current ratio above 1. Okay, now this is a sign of strength for Delta. It still means that investors still believe in the company and they are still willing to lend the company money. And when we see once again the total assets, total liabilities is still above 1. For example, if you look at American Airlines, this is way negative because liabilities are higher than the total assets. This is not the same for Delta Airlines. So here we have TSA checkpoint, and basically we see that at the moment 1.1 million against 2.8 million passengers as 1 year ago. So just the flying business is still way down, way further to how it used to be. However, where I think that Delta will survive and Delta will continue to be one of the most important air travel company in the United States, I even think that after this pandemic, we are gonna have a sort of an opposite effect. What I mean by that is that after you keep people at home, locked down, pandemic and stuff and boringness and things like that for more than 1 year, I think that once you release this very bad situation, travels are gonna explode. And that's just my idea, but I think that overall it's like, a spring, an elastic effect, a very strong elastic effect. And I think that travels are gonna come back probably even stronger than before because of this kind of contrarian effect. Okay, you keep people in the same place, closed, that they cannot move from home, from their countries and stuff. And then once all of that has gone away, well, probably people are gonna discover again how beautiful it is to actually take a plane and go somewhere else for just a couple of days. Okay, so I remain very positive on Delta. I have always been. I hold the company since basically May, but if in the short term, for example today -3%, I think that if we are gonna see another pullback in the short term due to bad news from vaccines, or for example the bad news from lockdown, okay, with the new president and stuff like that, I have no idea, but it could be that in the short term we are gonna see some turbulence. And if the stock continues to pull back around the 36 area, around here, a pullback where, in my opinion, for the long term, it makes perfectly sense to have some shares of Delta Airlines, because you're gonna differentiate a little bit from just owning tech stocks, which have done very great during the pandemic. But then once the pandemic has gone, in my opinion, it's still interesting to be some kind of exposed to real economy, okay? So to what is called as recovery stocks. And Delta Airlines could be back to where it was, okay, around $60 per share at least. I remain pretty optimistic, and if during December we are gonna see this pullback to continue, well, I think that is gonna be interesting, in my opinion, to buy some shares of Delta. I hope you find this video interesting, guys, and leave me a comment down below. Tell me what are your favorite stocks for December. Leave me a like if you find this video interesting and subscribe to the channel, and as always, guys, have a wonderful day.